Welcome to another AriasWave price action update for SNX synthetics. Now, in this count, we're basically going to make a modification to the corrective process that I've seen unfold over the last, couple of weeks. Um, so I've had to make a change here to this due to a couple of things. So, first of all, yes, price is calling up, and I've made it pretty obvious with how I've put the green for up, the red for down. Fair enough. So what we're looking at here is a couple of things. Okay, so before I get to the trading portion of this in terms of a leverage position, which you should always be careful if you're not unexperienced. First of all, um, we had the wave one in June, right? And the wave one and followed by the wave two, right? According to this discount, that wave two took basically about 26 days to complete. And then I believe we saw wave one with an expanded wave two, right? And I believe that the correction ended last night right before the CPI figures were released, right? And all that did was serve to confirm wave two is complete. Okay. So I believe this is a wave A, B, and then we saw a C, D, E pattern, right? So the start of E is the important one that we just broke recently, okay? So we broke it, we went above it, right? As you can see up here, this area here, we went above it, and now we're breaking down. Well, we're coming back for a pullback, right? So I do believe this type of V-shape move is the type of move that you do see once you're getting ready for a thrust up. Okay, so it's the type of coiling up in a in a way that is understandable in the AriasWave sense, right? It's just like wave one, two, and then wave one, two, and the confirmation of that break we've just seen. Okay, so as I mentioned to you before, I went long at a break of this level here, which turned out to be a wave one. So, having kept that trade, having made a little bit of a profit, um, now I see it a bit different. So that long position, was in case the thing decided to go straight up. But as you can see, it didn't do that. But it has hanged around the previous high of the first wave one. So, we went up above it, dipped down below it, went up above it, and then it became a form of support. And if you look at it through the AriasWave lens, then the CDE pattern, the E wave, the start of E was broken, and now we'll get a pullback. So that's fine. A pullback might come back down to either 50% or 0.618. Okay, this seems to be the way that it goes. I just want to compare right now how this wave A here, choppy as hell, type 2 expanded zigzag, looks like the first one we had, right? The first one we had was also, in my opinion, a type 2 expanded zigzag for wave A, right? And the same fractal patterns repeat over and over again, right? We had a wave B, and then we had a CDE. Now that CDE was much smaller, and up here the CDE a little bit bigger, but the correction, uh, the wave two here took 26 days. The wave two for here took 12 days. So it's about half, roughly, half the time. So you can see that there's less time in corrections, and as wave three progresses, the corrections will get much smaller and the move will become much sharper to the upside. But like anything, we need a good solid base in order to prepare for that move. but this is a game of probabilities here, and using AriasWave, I have come to the conclusion that this is what we're seeing here. So, right now, if we want to zoom in just to get a closer picture, but before we do that, the critical support, which was down here at $2.74, has now become critical support at $3.70. So that's a whole dollar up for support. Right. So now what I'm going to do is get into the nitty gritty of this. Okay. So right now, I would count that as a 5 wave move to the upside. Let's pull out the the RSI. Um, 1, 2, 3, 4, 5. I don't see wave 3 being the strongest move, even though it probably was during the CPI figures. So at this point in time, it's a case of, will this correct lower, or will it just start moving higher from here? Okay, so previously what's happened in these moves is that we keep having one theme reoccurring, right? And that is that every move appears to sort of well, after we get a wave one, we keep coming back to 0.618 retracement. All right. So the first move up, we had a 0.618 retracement around here, right? And then after the next wave one, we had a 0.618 retracement right around here, right? And then now, if we're to call this move that we're seeing uh, a wave one, that's obviously just been confirmed, then chances are we're going to see a bit of a pullback to 0.618. So obviously we're drilling down into, you know, uh, the smaller degree, right? Which I don't normally do in this manner, but I thought it'd be a good opportunity, seeing as though I have, you know, using probabilities, have identified what is potentially happening in a way that allows me to do so, which is a really good opportunity just to show you how in depth AriasWave can take things. AriasWave being my channel, right? I'm not trying to sell anything here, so please don't ban me again. It's just me. That's my name, AriasWave. Okay, it's actually Michael Arias, but my surname is Arias. Get it? Elliott Wave, Ralph Alf, what's his name? Ralph Elliott, whatever his name was. Yeah, I made my own version of a wave theory, wave methodology, right? Because I found that Elliott Wave wasn't profitable for me, and it was also created in a time where computers really weren't that ubiquitous. Um, and this technology, using TradingView, an amazing platform, has helped me do so and learn the waves in a way that I never would have imagined possible hadn't I had spent so much time investigating, like you're supposed to do your own research. Um, and I know some people who can attest to that, like my members. So, in order not to make this video too long, I just really want to point out that this is what we're looking at. Look, now that we've broken the start of wave E, this is already confirmation that a long position can be executed to the upside with minimal risk, right? With a stop at the lows, at the red line there, $3.70. But as I've mentioned before, there is a recurring theme with the first wave that we pull back to 0.618. Now, obviously, obviously, if you see this thing suddenly break up from here, then wouldn't hurt to go long at that point. But it depends, right? What happens if we do get a pullback to, 50%, 0.618? You want to be able to have a small risk, and maybe place a better performing trade, because obviously if you're measuring your risk, if you put a if you put a trade on now, your stops longer, you can afford to have less of a position. But if you get a decent pullback, you can afford to have that little bit more of a position, which can add up over time, especially if we're aiming for all-time highs here as it coils up. So that's something I'll leave up to you. Um, it just depends on your competency levels and your, how can I say it, confidence and conviction in your trading abilities, and also, you know, just being confident, I suppose, is the most key component, in my opinion. Um, and also understanding that the larger pattern is not complete. There is nothing to suggest that the larger pattern is complete by any stretch of the imagination. According to AriasWave, there is only two patterns that occur in the markets. I've made a video about this before. If you're not aware of it, then you may want to get up to speed. But for me, I suppose the proof will be in the pudding, which is what I'm all about, proof in the pudding. So this nice, beautiful V-shape recovery still can have a pullback. It doesn't have to be a deep pullback, but as long as you can identify the key components of the waves that are produced within that correction, then you'll have no problem understanding what this pattern is, right? I mean, we can go to the 1 minute chart and investigate it a bit further, right? So at this point, we have the first 5 wave move, followed by what appears to be a couple of zigzag A, B, C, D, potentially D, E. So probably another move similar in length to this one will probably happen from, say, for example, this point right here. So that's already taken us down a little bit further if we're looking at it in that perspective there. What's another way we could look at this? 33535. The A wave might have already happened. No, because this move here didn't make another low below this one, so that can't be right. So we're sticking to the ABC. You know what? Within here, you could have a D wave. Look at that. Look what happened there, right? Let's stretch that out a bit. Have a look what's going on. Okay, is there a D wave in there? A B C. So A B C D E. No, I don't believe so. So for me, at this point, I'm sticking to the yeah, what I've just marked here, that being probably an A wave that is incomplete. So in terms of the length of it, where would we measure that from? Well, 33535. Yeah, look, it could be that this A wave has already completed. This could be the deepest part of the correction. I mean, if this is supposed to turn impulsive, then why would the correction have to go much lower? I mean, just take a look at some of these corrections here. They go sideways. Do they always pull back a full point, you know, 0.618? Sure, it can happen, right? Depends where you're looking, right? The first one too can pull back quite a bit. But what about the second one too? Yep, it can happen, right? After that, you're just talking about a wave 3, 4 and a 5. So look, patience is the key here. Like I said, confirmation has already happened, and you can go long according to this count. But if you want to get maximum return or max, like a good entry with a good, you know, I'd go for at least 50%, right? Or 0.61A. What we're seeing now could be even the first part of a zigzag in terms of this could be a 1, 2, we could be seeing a 3, 4, 5, right? A pullback. So this correction may go on for a few more hours. It could go on for half a day, right? We just don't know, right? Now, if you have to go to bed, like it's going to get late eventually here, you might want to put the trade on, uh, you know, maybe a little bit of a position at a break of a high, and entry point automatic trip you in at the break of a high, or you could set an order to trip you in to a trade at 50%, 0.618, whatever the case may be. The point remains that um, you're looking for the best type of entry to go long, right? With the most minimal risk. Okay. So whatever that may be. All right. So this video has gone on for quite a while. I wanted to keep it short, but unfortunately, there's just too much to talk about when it comes to this pattern. So at the very least, to me, this is already confirmed that we are looking for higher prices. How low it comes down, that's another story. We could get a scenario where you get like an inverse head and shoulders pattern. That can happen also. So how would you do that? Well, you'd take the previous low there. Potentially you'd get something that sort of comes back down like that, right? And creates that like head and shoulders pattern. And then you get continuation. I mean, there's just a million ways you can look at this. Interestingly enough, that level there would be around 50%, right? Which makes sense, right? As corrections evolve, the corrective, sorry, as moves, impulsive moves start to get more impulsive, you start to get shallower retracements. And I suppose that's what makes wave threes so sharp, right? Because retracements aren't so big, they're not so deep, right? So I don't know. You've got to use your imagination as well as the waves, and try not to jump the gun too quickly, too soon. Markets take time to move. Don't be impatient, because that'll definitely set you on a course that will eventually lead to overtrading, gambling, and just that greed factor will just take over your mind, and you'll be focused more on making money rather than enjoying the process of analyzing and getting into trades with good reasoning behind it, not just because you saw an idea online from some random dude that says, oh, it's a good idea to go long here, because he's had some good moves in the past, some good ideas, he's had some losses, etc. Okay, so I've managed to stretch this out the entire 20 minutes. So hopefully you found this video interesting and informative. Thank you for watching.